Hey folks, how's it going? It's a very great day today. We have a special guest. I want to thank you guys for watching another episode of At the Table with Evantz Saint-Gerard. Our special guest today is Bill Donofrio. He does reverse mortgages. Bill, thank you for being on the show.
Thank you, Evan. It's great to be here.
All right, Bill, what exactly is a reverse mortgage for the folks who are watching? They have no clue what that is.
Okay. A reverse mortgage is an FHA insured loan that allows people over the age of 62 to borrow some of the equity that is built up in their homes over the years.
Okay, and how does somebody qualify for a reverse mortgage?
Well, qualifying for a reverse mortgage is a lot easier than qualifying for a traditional loan.
Really?
Yes. Yeah, we do look at credit payment history.
Mm-hmm.
You know, we look for a couple of years, and we look back on the payment history of real estate taxes and homeowners insurance.
Now, how much can someone borrow in a loan like this?
Very good question. The way it works, the FHA, which insures all of these reverse mortgages, dictates to us how much we can lend, and that amount is dictated by the age of the borrower and the value of their property. And so the older someone is, the more that they can borrow.
All right, so you said it's FHA related, so is that a reverse mortgage safe?
Oh, it's extremely safe. I got to tell you, a reverse mortgage it's probably the most misunderstood and maligned loan program out there. And it's really, really good for people over the age of 62, Evans, because it's very flexible. With a reverse mortgage, there is not a mortgage payment due every month.
Okay.
You can make a payment whenever you want, and there's never a prepayment penalty.
Okay.
But, you know, if someone wants to, they never have to make a payment if they don't want to. But if they want to make payments periodically, they can do it. And let's say you have a month like, I don't know, like December, for holidays when expenses may be higher, and maybe you don't want to make that mortgage payment,
Mm-hmm.
you don't have to make a mortgage payment.
Really?
The only thing you have to do, the responsibilities when you have a reverse mortgage are you need to pay your real estate taxes, and you need to pay your homeowner's insurance, and if there are any HOA or condo fees that are due, you need to pay those as well. You also need to live in the home as your primary residence.
Okay, great. All right, so you mentioned condos, so you can use your reverse mortgage on a condo?
Yes, you can.
Okay.
FHA approved condos are the easiest, but we can get other condos approved if they don't have FHA approval.
Okay.
We have a condo team that will get the project approved.
All right. Now, what happens if someone passes away in the home and their kids, the adult kids basically, what happens with that process?
Okay. Well, to clarify, when the last borrower passes,
Mm-hmm.
let's say there are two borrowers and one of them passes away, nothing changes with the loan.
Okay.
All right. When the second borrower passes, however, technically the loan is due and payable. However, the FHA will give up to 1 year for the loan to be settled. That allows the borrower's heirs to maybe clean out the home, list it with a realtor, sell it, and that's the way they can do it.
Okay.
That is the way it is done.
Now, in another scenario, what if somebody decides they want to leave the home, whether the person basically moving to the senior facility or they're moving to another location, what happens to the loan then?
Okay, very good question. One of the requirements, as I had mentioned before, is living in the home as your primary residence.
Mm-hmm.
Right? So if the home is sold and the borrower can sell the home whenever they want because it is their home, they're never signing off on the deed. You know, the lien is exactly as when they purchased the home. You know, let's say they bought it for $400, they put down $100, they got a mortgage for $300. They're on the deed, but let's say Chase Mortgage is lien holder. So with that, if they decide to move, the loan needs to be settled.
Okay.
If they go into a nursing home for over 1 year, then technically the loan is due and payable.
And the responsibility of the payment would be from
From the from the borrower in that case.
And if
you
they
know,
can't, basically, then they're heirs.
they could sell the home.
Okay.
And if they sell the home, the way it would work is, let's say their balance, let's say the loan balance is $200,000 at that time when the loan is due and payable. Let's say the home is, let's say you sell the home for $600,000.
Mm-hmm.
What would happen is the lender would be paid their $200,000, and the borrower in this case, if they didn't pass, would be entitled to the remaining $400,000.
Good to know.
Another good thing with a reverse mortgage is because it's an FHA loan, there is FHA insurance, which means that you can never owe more than the property is worth,
It's good to know.
which is great. That's a great feature of the reverse mortgage.
All right.
So, you know, when I speak with people about reverse mortgages, they'll say, oh, we don't want to leave our kids any debt. With a reverse mortgage, you're not leaving them any debt. You're leaving them a little less equity.
Mm-hmm.
You're not leaving them any debt, because in the absolute worst case scenario, the home is going to settle the debt, no matter how much it is.
All right, Bill, you gave us a lot of information. I know people have a lot of questions. How can they reach you if they have any other questions?
Please call me at 917-907-1458.
All right. Well, this has been Evantz Saint-Gerard with At the Table. Thank you, Bill, for coming by. And if you have any other questions about buying a home, selling a home, or investing in real estate, feel free to give me a call. You can reach me at my cell phone, 917-975-5985. Bill, thank you again, and thanks for watching.
Thanks, Evans.